welcome to Mazars Tax Tips, a podcast series where we'll be discussing some tips and updates to keep in mind this tax season. I'm your host, Sofia Cordero, and I'll be joined by my colleague, Evan Bacon. We're both managers and part of our accounting and advisory practice here at Mazars. Today, we'll be discussing helpful tips and developments related to two important business relief programs: the Paycheck Protection Program, also known as the PPP, and the Retention Credit, known as the ERC. Since there has been many changes and updates regarding both programs, we think it's a great time to go over with you some of these changes and how this impacts your business. Evan, let's start and talk a little bit about what is the PPP program. We know that there's two different rounds of PPP that were available for businesses. PPP 1, which came out with the CARES Act in April of last year, and PPP 2, which was released as part of the second stimulus package and the American Rescue Plan, which came out in late December. Can you share with us some of the latest updates related to PPP?
Hi, Sophia. Thanks for having me. Sure. As far as PPP 1 and PPP 2 go, a lot of companies think they missed the chance to apply. The good news is the programs are both still open. The original cutoff was March 31st. It's now been extended to May 31st. So you can still apply for both things. Just to do a quick recap, PPP 1, that was eligible for companies with 500 or less employees. You can get a maximum loan size of $10 million with a loan based upon 2.5 times your average monthly payroll for either 2019 or 2020. PPP 2 is a little different. You can only apply if you've received a first draw PPP loan and have used the funds or will use them by the time you receive the money. You need to show a 25% or more reduction in gross receipts between any quarter in 2020 versus 2019, or the entire year of 2020 versus 2019. You're limited now to 300 employees, and the loan size is capped at $2 million. One of the things they did do away with is the alternative size standard for companies with more than 500 employees that met some revenue criteria. So that's not allowed for PPP2. One other thing to mention, which Sophia, if you want to touch on, because I know we had spoken about this, calculation changes. So correct me if I'm wrong, if you did something wrong when you originally applied, there's an opportunity to fix that now, right?
Yes, there is under the second stimulus, when the PPP2 was released, it allowed for companies to go back and modify their loans. So knowing that there was so many changes with the first round of PPPs, businesses were trying to get their application as soon as possible. And they may have made an error on the calculation or missed some cost to include as part of the loan calculation. So right now, businesses are able to go back to their banks and modify the loan, which is great, right? Because if they thought in the beginning that they missed the chance to correct their loan, now since the PPP has been extended until the end of May, you're able to go back and modify. So it's definitely great that is allowing businesses to have a little bit more time to go back and claim these funds. So thank you for sharing these updates. I think there's definitely valuable information for our listeners and businesses out there to take advantage of both programs and to be aware that there's time.
Can I mention one more thing?
Go ahead.
Or two more things.
Sure.
As part of the changes, if you wanted to make a change, so something that happened was for self-employed individuals, prior, you could have your payroll, but if you as the owner wanted to get a PPP, it needed to be based on profit. So now they changed that. So that's going to be based on gross receipts now. So you can actually show a loss on your Schedule C. As long as you have gross receipts, you can get a PPP loan, which would be based on the, annualized or yearly average of your gross receipts. And in addition, for borrowers in accommodation and food services, your loan amount for PPP2 could be 3.5 times the annual payroll. So if you did something prior, those are two ways that you can fix it. Go back and get more money. And then another thing just to mention real quick would also be the additional forgivable costs. So I think most people know with PPP, you have payroll, you have health, employer health payments, retirement, you have non-payroll, which would be, let's say, rent, mortgage interest, utilities. They've opened that up now to include PPE, certain computer programs, billing systems, things to allow people to work remote. If there was vandalism, you can get money for that. And then supply chain interruption. So a couple more options. Again, the idea is, do people have time? They have time. And can they fix things? Yes. And now there's more available costs for them to cover. So all good things for businesses.
That's great. Thank you. Thank you for sharing all the updates. Now I also want to talk a little bit about another hot topic, which is the employee retention credit. When PPP was just released under the CARES Act, the ERC was also part of the act, but one of the criteria was that if businesses qualify for both the PPP and the ERC, they needed to choose one or the other. They couldn't combine them. So we know that with the recent guidance that was released under the Consolidated Appropriations Act in late December, it expanded the rules in that eligibility. Can you give us a little bit of an overview of what is the ERC? We know that there's two different programs, ERC under 2020 and ERC 2021. Can you share with us some of those most recent developments?
Oh, sure. So like you were saying, originally you had to choose retention credit or PPP. Most people chose PPP because it was money up front. It was 100% forgiveness. A lot of companies, or less companies, let's say, did not go with the retention credit. So now you can get both, provided you use different wages for each. But just to do a quick recap, the retention credit for 2020, you had to have 100 employees or less. You had to show a 50% or more decline in gross receipts from a quarter, starting with second quarter in 2020 versus a quarter in 2019. And then your credit was limited to basically $5,000 per employee for the whole year. With the 2021 retention credit, they made it a bit better. It's going to be more of a quarterly calculation, but they've upped the employees, so you can have 500 or less employees. You have to show a 20% or more decline in gross receipts. You could do it from a quarter in 21 versus a quarter in 2019 or the prior quarter. So let's say now you can look at Q4 2020 versus 2019 to see if you qualify. The credit is now increased to $7,000 per employee. And the best part is this is now going to be per quarter. So you have the option of doing this for 4 quarters. You can get a maximum of $7,000 per quarter per employee, $28,000 per employee for the year, in addition to the PPP. So that's a lot of good money. The way to claim it, 3 ways. It's on your payroll tax return, so a 941. You can do that, like for example, currently first quarter, when you file that, you can file it retroactively. So you could do an amended 941X, which could be for 2020, or it could be if you did not file on time, or did not report it on a 2021 payroll tax return. Or you could do what's called an advance, which would be a Form 7200, where if you know you're meeting the criteria and you know you're going to qualify, you can actually get that money early by filing a Form 7200. So 3 ways to apply. A couple other things to mention. You can always take retention credit for employees paid not to work. So if you were over the 100 or 500 minimums, in that case, anyone paid not to work would qualify for the retention credit. One other thing they added was for what they're calling severely financially distressed companies. If you had more than a 90% drop in gross receipts, you would qualify for the retention credit on all employees, regardless of size. So that's nice for really hurting business. And there's one other way, which we've talked about a few times. We have the revenue criteria, we have the staff sizing, and there's another way to qualify, which is called shutdowns.
Yes, so that's great that you're pointing that out, because that was one of the areas that I wanted to go a little bit more in detail, because I think that businesses are not aware that there is this third option, which as you mentioned, headcount is one of the criterias, and the second one, the gross receipts. But if a business doesn't qualify under the gross receipts test, there's also another consideration to take, which is if the business is considered to be fully or partially shut down by government. So that doesn't seem to be very black and white, and businesses may not think that they qualify. Certainly, most businesses in the beginning of the pandemic and even now have some restrictions added to their business model, right? So I
Yeah.
think it's worth if we're able to go through some examples so our listeners could know what could qualify them under the fully or partially shutdown.
Sure. So a full shutdown. So again, these shutdowns have to be, like government-wide, statewide, or local. And then basically a full shutdown would be, that you had to cease operations. You literally couldn't operate. The business was closed. A partial shutdown could be some type of restriction. So let's say it's a restriction on the hours you can operate, a capacity restriction, a supply chain restriction, maybe even a staffing restriction. So examples could be, restaurants that couldn't operate to full capacity, or they had to close early. Let's say gyms that had to keep people spaced apart and couldn't have full capacities. I had some clients that had hair salons that couldn't have people come in full capacity, and some, have a yoga studio that couldn't have anyone. People needed a prescription literally to come in because they had a capacity restrictions. So you're right, definitely a lot less black and white as numbers, but still creates an opportunity. The other thing would be, in addition to the restrictions, it's like a profit center calculation. So if you have a decline in receipts, which they're considering more than nominal, so a part of your business that earns more than 10% of the income, if that specific area was shut down or had the decline, they would qualify. So maybe not your full business, but something that you do or specialize in that makes up more than 10%. If that was affected, then you could also qualify for the retention credit.
Yeah, so it's definitely good to mention that there's a lot of options. And like you said, it needs to be analyzed on a profit center basis to see if maybe one area of your business has experienced this declines or restrictions that we're mentioning that could get the entire business to qualify for the retention credit. So it's definitely worth for businesses. And we always advise our clients to go through that detailed analysis to figure out the eligibility and not just rule it out if they're going based on the main two criteria, the headcount and the gross receipt test. The other area that I want to mention is some of the misconceptions that PPP and ERC rules are the same. So the PPP is administered by the SBA, and the retention credit, the ERC, is administered by the IRS. So they both have different rules. And some of the areas that we focus on for both programs is the wages, right? So wages for PPP are considered non-payroll and payroll costs. And for the retention credit, it's qualified wages, which they have different definitions. So it's important for businesses to know that they have to analyze both programs separately because they have specific criteria. Also with the headcount, one PPP could be full-time equivalent, and the equivalent calculation for the PPP and ERC could be different. So that's another thing that is worth mentioning. And one that is very important is the affiliation rules and what's the interaction that has with the PPP and the ERC. The ERC, any affiliated businesses, you need to take that into consideration if there's certain percentage of ownership of any of the owners in the business that you have to include when trying to figure out if they met eligibility. So I think it's important for businesses to keep in mind that although there were programs that came in the CARES Act and they were both released together, they have different rules and you have to analyze them separately.
I do want to mention, like you said, the owned businesses. If you have more than a 50% owned business, you don't qualify as the owner for the retention credit. And then they look at related party. So if you employ your spouse, if you employ your sibling, children, their siblings, whatever, they're not eligible for the retention credit. So payroll on PPP is payroll for everyone, plus owners, and you can throw in the healthcare and the retirement and all that. For the retention credit, it's just the wages and what they consider qualified is not 50% owned or more, and not a related party. So it's a little tricky for like a family-owned business, but the good part is that the rest of the staff does qualify. But it is important to know the differences. If make sure the company knows the distinction. One set of rules does not apply, the same across both programs.
Yes, that's correct. And for the ERC, we also could include the health costs, right? So it's the wages and the health costs for retention credit, and for PPP, all the other categories that you mentioned. Yeah, so it's definitely something that I think our listeners are going to find valuable, because we need to go through that analysis to be able to figure out what qualifies for both programs. And then I think that the last thing that I want to go over is maximizing the benefit under both programs. I think that's what businesses out there want, knowing that now they have the flexibility to apply for both the PPP and the ERC. The goal would be to maximize the benefit under both, get a full forgiven loan under the PPP, and also maximize the credit per employee under the ERC rules. So can you share with us some insight on this? Like, what are some considerations that business should take to be able to maximize the benefits?
Sure. I mean, again, like you're saying, still some businesses think you can't do both. So let's be clear, you can do both. The thing that you can't do is share the wages. So just as an example, if you had an employee that made $20,000, you can say, okay, this 10 is going to retention credit, this 10 goes to PPP. So you have to make a distinction between what's going where. The key to maximizing both, which is the goal, is to use up as many non-payroll costs for the PPP as possible. So you're allowed with PPP 60% payroll, a maximum of 40% non-payroll. So you want to free up as much payroll for the retention credit. So with the 40%, like we talked about earlier, you have the rent, the utilities, the mortgage interest, and now the expanded costs to the vandalism, the computer programs, the PPE, et cetera. So you have this expanded pool of non-payroll costs. You want to fill those up for PPP, and then you want to take as much payroll as possible to the retention credit. And so how do you do that? So let's say you look at 2020, and if you haven't applied for forgiveness yet on PPP1, they call it stacking. We figure out so much is going for each employee to the retention credit. Here's what's left over to PPP. What other non-payroll costs can we pull from to make sure we get full forgiveness on PPP and as much, retention credit as possible? If you did apply, is there hope? Yes. One of the ways is, if a lot of people that got PPP, maybe they got in April, May or something, their covered period, their loan period was basically Q2 and Q3 of 2020. So in a lot of cases, Q4, if they meet this revenue criteria, the 50%, they can look at those wages specifically for retention credit. So they've already gotten their forgiveness on PPP. You can look at a period, a lot of cases Q4, where the wages can be applied towards retention credit. Or again, you can look at highly compensated individuals. So for example, PPP, you have the capping of $100,000. So if you have people that were paid a lot, and a lot of those wages couldn't go to PPP, you can go back and look at those wages as well. So there is hope for businesses who already applied and received forgiveness. You can still go back and get the retention credit. A little different in 21, because I don't think too many businesses have applied for forgiveness for PPP2. I don't even know if it's open yet. The way that would work is, you have to kind of model it out. You have to forecast and you have to look at your numbers and say, okay, if I'm doing the retention credit first, do I have enough left over, and figure out what are you going to use? Are you going to do 8 weeks, 24, some combination in between? Look at it and make sure before you submit for the retention credit, is there enough available, or do we think there's enough available to cover the PPP when it comes time to apply? So that's one of the key things, like you're saying with the businesses. Consult, let's figure out, look at the numbers, make sure it works both ways, do the exercise. But the good news, like you said, is you can do both. You can still go retroactive, and you can still receive it if you've already received your PPP-1 forgiveness.
Great. Yeah, that's a great point, because some businesses may think, I already applied for my PPP forgiveness. I received approval from the SBA. Now I am not able to go back and claim ERC, and that, as we know, it's not true. You could still go back under the ERC rules. You could go back 3 years and retroactively claim for the credit. So it's just a matter of, like you explained, going through the analysis for both programs under the 2020 ERC and for 2021, since that's still in place right now, and the cover period for PPP hasn't ended. It's a matter of modeling now what that payroll would be to be able to maximize the credit. I think that's the most important thing, in the message that we want to give to our listeners, is to know that you need to be able to maximize the credit under both programs, but you have to go through that process and analysis, which is very important. Well, thank you, Evan, for all your tips and insights about the programs. There was certainly a lot of confusion in the beginning when the programs were released. There was a lot of changes, updates to the rules. So thank you for your time. And we hope that we were able to clear up some of the confusion and provided insights in the latest updates under these two programs. So I just want to thank all our listeners for joining us today. Please note that all information that was shared on this podcast extends from reputable sources, and views expressed today are meant to serve as suggested guidance based on knowledge and experience. If you would like to know more information about the topics discussed today and other helpful tips, please visit us at blog.mazars.us/tax tips 2. Thank you and have a great day.
Thank you.